right, welcome. So today we're going to talk about how I use the Fibonacci. I started a series a little while back. I'm going to add this to it, do some more videos showing the basics of my trading method. So whether you're learning my method or taking some of these ideas and working them into your trading, these are some of the basics that after many, many years of chart experience in trading, some things that should really help you. So today it's the Fibonacci and how I use it in particular, which is different from what you normally see. Some differences, some similarities. So again, we're going over basics here. How do I use the Fibonacci? So here's a visual. First of all, you'll notice something different right away, which is I only have the 50 to 618 retracement levels plotted here. I do not use any other levels. Again, years of experience and looking at these things on charts. If we're having a retracement before we get to this area, let's say we're having a bounce in price here. Before we get to this area, I have other ways, other tools, moving averages and such, to use as areas of information, as I call it, to tell us about things, right? So the Fibonacci levels that are, typically used before you get to this 50, what is it, 382? It's been years since I've used them. All these other ones that aren't on my chart that I removed from the indicator, to me, had no purpose at all after really, spending a long time testing these things. And what I found was these were the most important. These were the only ones that gave me any information that was, usable, and saw a certain reaction in price. So looking at the 50%, now, of course, if we draw this fib, it's just from simply the high to low of the recent move here, euro dollar, 1 hour chart. And if we're starting to have a retracement up from this point and we reach the fib area, then, of course, that's our obvious leg down that we're, top to bottom of the trending move that we want to measure the retracement of. So first of all, just talking about quickly drawing it correctly. Another one that would have been correct on the previous day. So that's today. Now, if I was drawing it yesterday, at this point in time, on this day here, then I would have this high to low, right? And then you could see here, you actually have a retracement right into the area, the 50, and continuing from there. Now, again, just to point out, as I always say, it's top to bottom of the trending move, or bottom to top of the trending move that you want to measure the retracement of. So that would be obviously here, right? Now, if you're drawing these other levels, what are we looking at here? Is this top to bottom of the trending move? No, this is ranging structure, right? We don't have lower lows, lower highs, or vice versa. We're going sideways. So this would not be the top or the beginning of the move, right? So it's always a matter of finding that trending area you want to measure the retracement of. Now, sometimes, it's questionable, and I always go back to that when you have, any question about where you want to draw that. Again, catching the trending move top to bottom or bottom to top extreme without any additional noise or any sideways structure price-wise involved in drawing that. So there's a couple examples, simple enough, right? Okay. You can see it. My other videos show lots of fib drawings. All right. Now, 50 to 618. Why is that there only? Well, something happens here. So if we're in a downtrend, or we have a leg down, and we're having a retracement, the 50 Fibonacci level right there is 50% of the move, right? Half of that down move is right there. And that has a specific use. Again, we're in a downtrend. Everything is flipped if we were drawing this on an up move. So in this leg down, retracement up to the 50 fib, the 50 is telling me about selling activity. It's like clockwork. It will never fail you, these levels, and what they're going to communicate to you. They're going to give you factual information. So you can look at it as, again, other levels aside, other tools aside, if we're bouncing up here and we're getting to the 50, it's very clear information about what sellers are doing. Are they active? Are they inactive? Right? Are they looking to sell into these up moves? And again, if you're using basic VSA stuff or any other sort of tools in your trading, that you could look at this and say, is there weakness coming in, or however you would define that. So, and for me, it's looking at that weakness and looking at the reaction. I can go to smaller time frames, and that's stuff shown in other videos. So that's going to tell us, the 50 is going to tell us about sell activity, right? And we're using the 50 to 618 as a zone, 50 to 618. So typically what I'll do is draw that box, delete the fib, and I can have a few boxes here and there if need be, so I don't have my fib lines all over the chart. I just have a couple of boxes. I can go to a smaller time frame and do some smaller swings, and I'll just have boxes that are not, so we don't have fib lines all over the place. Now, I'm using this as a zone, so it makes sense to do this, get rid of that anyway. So using this as a zone, 50 to 618, think of it as, again, if we're doing, vice versa, an up move would be the opposite. This is an area after the down move that's going to tell us about sell activity at 50 to 618 and the 618 overshoot, which would be just above it right here. This whole area is telling us about sell activity and if the trend is likely to continue down or reverse. So incorporating some supply-demand VSA stuff in my trading, what I'm looking for is increase in selling, right, in this area as a zone. So what does that mean? Immediately when you first hit the 50 fib level, again, you can look at smaller time frames when it first gets there because it's about price areas anyway, not time frames. But you can get some detailed information on smaller time frames as soon as you hit that 50%, right? If you see weakness, right, now, as we're moving up, the whole zone, I consider it a zone as I named it one day, the fib zone many years ago, is gonna be that area that's gonna, so we could continue to move up and see weakness, right? So if at any point I'm not seeing sell activity through here, I know it's likely to continue, right? So again, this is an area where it's kind of like whoever's interested in selling is going to start increasing their activity in this area. And as I often talk about, it can overshoot or do a pop up just slightly above the 618, and that really covers the whole area. So through there, I'm looking at weakness and looking for sell activity to tell me if the trend is likely to continue from that point, or if it's going to reverse back if I'm not seeing selling, right? If you go through my videos, you see examples of both. The live streams lately, we saw a big fib broke and to the downside. We knew that was coming because of the reaction. Not showing buying in that area, showing weakness. So it's a very telling area, right? It's easier to predict than other areas, in my opinion, as far as where price is going to go. There are some nice predictable areas too, 14 EMA and things. But it's easy to predict off of the activity within this zone what's likely to happen. And if you really look at it, what are we talking about here? A basic trending structure, waves down, and, right, this is normally, whether it's Elliott wave or whatever, right? You're looking at these waves, and this point is normally kind of where you draw it. If you're looking at the Wyckoff market template and a markup and markdown, right? And these are redistribution or reaccumulation areas, right? You'll tend to just kind of draw it half, right? We're talking about this zone when we talk about these things, right? So says the chart. That's where this real stuff, activity takes place. That's where it goes down, the decision, right? So, and that structure-wise, right, says either we're going to look to continue the trend, at least says, if we get the right information about selling here, that we're likely to come back to the low, if not continue the trend. The reaction to the low is another story. And we'll talk about testing and reaction to levels in another video. So using that as an area to tell you if the trend is likely to continue or reverse, right? I was going to draw, so let me just, should I even do that? Yeah, okay. I'm going to switch. And again, we're talking about basics, so I should show this. Call it a basic, as it is. And then we'll have a little more detail, know what to do here. So, again, this is just the template of the market, right? Whatever, come down. Okay, everybody's seen this, well, whether it's Elliott wave or, right, markup, reaccumulation, distribution, whatever. Okay, go ahead. Elliott waves, 5 wave up, 3, 4, 5, A, B, C retracement, right? Let's, how do I undo it real quick? If you have 1, 2, 3, 4, 5 waves up, A, B, C retracement, right? I didn't make that up. That's regular stuff. Look where that goes. It's the 50 to 618. This is what we're talking about here, right? Okay. So let's say, since we already looked at some sell activity example. All right, so if we're looking at this area after this up move, right? Again, very simply, if you're going to see demand coming in, right? As soon as you touch that 50 fib, it's going to tell you about buy activity. As you're moving down, it's going to tell you about buy activity. Again, it's sort of a zone. These lower prices are going to either show demand coming in or not. And again, that's going to tell you which way you want to go, right? Likely to go off of that. And again, the 618 and slightly overshooting the 618. I guess you can call it maybe a 65 or something %. And that sort of being the last possible point where this is going to hold together and stay bullish, right? The 618 overshoot. And again, important to see that demand. So go through the charts and see examples for yourself, whether it's the 5-minute chart, a 1-hour chart, drawing these really obvious fibs, and you'll see that, again, for example, if we're coming down, and let's say as you're hitting here, 50 fib, volume did not increase. It was a little on the low side. And then as you came down, not much activity in the market. The ever important 618, maybe you got a little something, but it kind of died off and it wasn't much compared to your previous volume stuff. This all says you're going to support this low volume through here because it's testing for demand, signs of demand. It would be increased volume into lower prices, right? The accumulation at these prices as others are selling, right? And that creates the sign of strength, or however you want to define it. So again, of course, on the other hand, real quick, just to show it, well, a very typical picture of a confident bounce, that you're confident to see a bounce, would be, just examples of what you'll tend to see when you very first, how excited are the buyers, right, to continue this up move, right, off of this level? How excited are they? So we'll give an example of when it's very obvious as well. You'll see it at the 50, and then it doesn't mean you have to go from there. This is, again, this whole area is considered, so now it's lower price, right? Let's say that's fairly high volume too, right? They're looking at lower prices starting from here to buy in and show you those signs of strength. And okay, maybe you're floating down a bit, volume staying on the higher side, and then you do a 618 overshoot. That has high volume, right? That's all the most clear and straightforward information that you're going to continue up. Trying to break this level is the next thing. Or maybe you fake break, maybe you do. But there's the trade if you're looking to get in, and however you get in. So it really is that simple. Low activity, you'll tend to break through, right? The demand didn't come in. The signs of strength didn't come in. High activity, especially when you hit the 50, lower prices throughout the zone, and then that ever important last, if you do get down there, that last 618 and 618 overshoot, and making sure that holds. So, it's a situation that develops as you're looking at it. And last thing I'll say here is, okay, so how do I decide when I say I start to see some strength, right? So what I'm looking for to get into a trade is, of course, the imbalance in supply-demand. So if I'm going long here and I'm expecting this up move, I want to see high volume demand, low volume supply. This shows us high volume demand already, right off 50. Now, what if we're, again, going down a little lower and we bounce off, again, seeing demand? Okay, we got some accumulation, even off the first one alone. But here's two examples, typical situations sometimes you see. And then I have a way for testing for supply. So, for example, you have this swing point here that was created, and let's say that's on low volume, testing this area. And I'll get into this in some other videos about testing these levels and getting information about supply and demand. But simply put, lower prices, our predetermined fib area, high activity, rejection showing. Now, any levels you're testing, which again I can get into in some other videos, resistance, smaller fibs, moving average, we'll get into that. And that's showing lack of selling, right, along with the buy activity. Very high probability to move up. You're out of balance here. There's more buy activity than sell activity, right? So whether you're using, some sort of VSA, or for me it's a more simplified, straightforward supply-demand activity thing here. But seeing the imbalance is the key to timing when I want to go long. Sometimes you'll see a situation and say, it's not likely to get to the 618. There's just not enough selling and there's so much buying, it's not likely to get down there. You could also consider getting into a trade in this area that your stop loss, right, would be allowing for, very often I do here. So if I'm getting long anywhere in here, I'm allowing for the 618 overshoot level, whatever it is, 6.5, right? So I could put my stop 10 pips below or whatever it is, below that. Knowing that once we get past that 618 overshoot spot, it's likely going to support. No reason to hold on to the trade, right? Okay. That's the stuff I wanted to get done in this video. So I did a couple of videos already that are basics of my trading method in the title. So I'm going to start adding, this is probably the best thing for people who are new, obviously, and then make a playlist and you guys can watch that. All right, so hopefully that's helpful. I'll be live streaming likely today as we get to, or even a little before I'll start probably U.S. session. Looking pretty exciting out there. That's it. So I'll be live streaming and doing more videos. Subscribe, like the video if you like it. Let me know what else you might want to see explained maybe in the basics of my trading series. Okay, guys. See ya.